Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hey guys, what's going on? This is Beau, and this is the Investor Financing Podcast. Today we're talking about funding your small multifamily properties from 2 to 8 units. We have a product with loan amounts from $50,000 up to $2 million. And what's great about this product, we offer a 30-year fixed, a 5-year fixed, 7 and 10-year fixed. And we also have the capabilities of offering interest only on some of these products. We can use new appraised value after 90 days. From months 4 to 6, we do take a 5% haircut on max allowable LTV. On purchases, we can go to 80%. Rate and term refinances, 80%. Cash out refinances, 75% loan to value. We need a 1.2 or higher on the debt service coverage ratio. Minimum credit score is 620. Keep in mind, we can't do 80% with a 620 credit score. We need a 700 credit score better to get 80% on purchase money. We make loans to your business entity, not to you as an individual on this program, which is also great in my mind because it's not going to be shown on your credit report, which makes it easier to finance your conventional loans if you're refinancing or got several.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Mortgages on your personal credit report, this won't show up for debt service coverage, your debt ratios on a conventional loan, which is a big help. A lot of my investors right now, what they're doing is they're going in and they're getting a bridge loan on their small multifamily. Maybe they own a 5-unit and they're doing a big rehab on it on their acquisition. So on the acquisition side, we might do 80% of purchase and 100% of rehab. They rehab the property, they put new tenants in or raise rents, and now they use new appraised value and they go into one of our perm loans. So we have some really good products that complement each other. And I'm getting a lot of inquiries on these small multifamily deals. Most of the banks out there, they don't want to do any multifamily, any 5, 6, 7, or 8 unit buildings with loan amounts less than $1 million. And so we're really getting a lot of inquiries in the $200,000 to $800,000 range. People are looking for funding long-term perm loans, and we have a great solution, great pricing. And we can also pair it with our fix and flip or our bridge money loans. This also works on our single property. We have single property perm loans as well, 30-year fixed, 7, 5, 10-year arms, with interest-only options on some of those products. And so the basic qualifying is credit score, background check, fill out a PFS, a personal financial statement, and debt service coverage ratio. So we need a little spreadsheet showing what the rents are, or what the projected rents are, what the taxes and insurance and HOA, if there's any HOA, and we figure out, make sure that the debt service coverage ratio is in line. And based on your LTV and credit score, and whether it's a purchase or cash out refinance, we price your loan out. The only other thing we really need is obviously insurance, an appraisal, and 2 months of bank statements showing enough in reserves to cover 6 months of PITI. Although If you have a lot of equity in a property, we can use equity as a consideration versus having the reserves in your bank account. This is a very, very good product. We're getting a lot of inquiries because, like I was saying earlier, on the 5 to 8 unit, the smaller multifamily, there's not many homes for those loans. The banks are very difficult to work with. They want your tax returns. We've streamlined the process. Plus, we can pair it with one of our bridge or fix and flip products. And now you have long-term financing that's not reflected on your personal credit report, and you're off to the races. I hope this was useful. If you have any questions, feel free to reach out and look for our next episode. Thanks for listening, and we'll talk soon.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.